Good. Let's move on to another environment stock in this space, and that is British American Tobacco. 44 cigarette brands all over the world. Principal brands, of course, which they call their global drive brands, are Dunhill, Kent, Lucky Strike and Pall Mall. That's right. I was about to say Benson and Hedges, but they rolled that thing into Kent, I think. Market capitalization, of course, listed here on the JSE on a secondarily basis, so that's 1.6 trillion rand. That's huge, my goodness. Price to earnings ratio of 20.72, dividend yield of 3.8%. It's expanded its business in America by taking out some minorities or holding its stake in Reynolds America. I mean, how do you feel about them? Let's put up the share chart. I've always been negative, but my goodness.
We do hold them in local portfolios. Again, this is one of the multinationals rand hedge type counters that we do hold. Again, one of you've also just on the global drive brands. Also, Rothmans is in there as well as another one of their global brands. But I mean, they produce out of, I think there's about 1 billion smokers worldwide. They service 1 in 8. So I mean, there is actually still room to grow. I mean, a lot of people look at British American Tobacco as a very saturated business.
A lot of smoking in China, but the Chinese market, they have state-owned companies that produce cigarettes there for some reason.
Yeah, and
so
it is difficult.
But
again, if that nut were cracked, but also
so actually that means that BAT's market share is sort of higher in a way than one might think of the private producers.
Of the private producers, exactly. But still doing well in sort of the Southeast Asian countries at least as well. But I mean, overall, smoking is an interesting, because you've got all obviously the regulatory pressure. You've got global health trends. That, I mean, surely educated people will know not to smoke. I mean,
so younger people are smoking less than they were before, except in a couple of countries where there's still high prevalence of young people.
But again, I mean, these tobacco companies have shown themselves to be incredibly innovative with the introduction of e-cigarettes.
And to have considerable pricing power. So notwithstanding the fact that in many countries cigarettes are becoming much more expensive because of punitive taxes, they've been able to maintain their margins and maintain their market shares and to maintain their brand positioning. So they've done spectacularally well. But can they continue to do as well as they've done?
Again, I think it's it's another expensive company. I mean, we're talking in PE terms, equivalent to LVMH, slightly better dividend yield. Again, an addictive product. I think it is an innovative company. I think the move into e-cigarettes and how they're treating them, I think that will be clamped down shortly. I mean, the way that they're advertising them, the regulators aren't going to let it pass. So your sense is that
while they're having a bit of a trot now, there's going to be pushback at some point.
But again, I think it's an excellent compounder. I don't think smoking is going anywhere. I think again, I can't see. I think it should be a cornerstone of a portfolio. I think you should include it. It's not something that's going to disappear overnight. It's one of the blue chips, and in spite of regulations, I don't think the world's going to kick the habit just yet. And I would stay long and hot.
Long and hot. Okay, I'm going to give it another pass, as I always do.
Smoking hot.
Smoking hot.